Hello traders, and welcome to a new educational video. But this is not going to be a single video. This is something much more deeper. We're diving into a comprehensive guide, a series of videos dedicated entirely to candle range theory, or CRT. So, why CRT? Well, I have been receiving many DM from you asking for a detailed breakdown, and that's exactly what we're going to do. So, if you have ever wondered how to truly understand the mechanics of price action or improve your trading strategies, welcome, you are in the right place. Let's get started. So, what is CRT? Actually, before explaining what CRT is, I should first tell you why I am teaching you CRT. In the starting of my trading career, I have studied a lot of charts, classic support and resistance, smart money concepts, Wyckoff theory, and ICT. No doubt, all the credit goes to ICT first. I have studied all of his material, but the conclusion is CRT and turtle soup. There is nothing else, other than CRT and turtle soup. When I introduced myself to CRT, my entire approach to the trading completely changed. CRT is the most modern and complete form of technical analysis. CRT stands for candle range theory, which means that every single candle you see is a range, and this range can either break out and continue downward, or it can create a turtle soup and then rally, or vice versa. In summary, every candle is a range, and by using the current or previous range, you can predict the next range. CRT is based on what? CRT is not a chart pattern, as many fools claim it to be. It works on proper logic, which is the power of three: accumulation, manipulation, and distribution. So, there is one accumulation candle, one manipulation candle, and then a distribution candle. This is a three-candle model. CRT is a three-candle model: candle 1, candle 2, and candle 3. Candle 1 is accumulation, candle 2 is manipulation, and candle 3 is distribution. As a beginner, you should not touch the first or second candle. You only need to catch candle number 3. That's simple. And this is the revolution of CRT. Before CRT, there is no one was willing to show that you should trade specific candles of higher time frames. And this is a drawing of 3 candles from higher time frames being used to trade them instead of zones. This only happened after CRT. Before CRT, every ICT trader was trading based on 1-minute market structure shifts, and this is totally nonsense. Sorry for my words. Now, what we are trying to do is trade the range of higher time frame specific candles. The problem is, many CRT traders try to trade every single candle, but this is wrong. If you do that, you will simply burn out, and you won't trade anymore. By doing this, you will never become profitable. For those watching, you can be one of 2 types of traders. Beginners are allowed to trade only candle number 3, while advanced traders can trade candle number 2 or even candle number 1. Now let's assume this is our CRT candle. Candle range theory means we mark the high and the low of that candle as the range. We expect a turtle soup at the low of that candle. As soon as you see a turtle soup above or below the range, followed by a strong rejection, and the second candle closing inside the first candle's range, that's all you need. Then you wait for the third candle to open, and you'll buy below the opening of the third candle. You also have to look for a PD array sitting in the discount area of the second candle that creates the turtle soup. Once your trade is active, you can target 50% of the CRT range. Remember, when you target only 50%, your win rate becomes much higher. I personally advise taking partials at the 50% level and holding 1 or 2 positions to the opposing end of the CRT range. This is the same for bearish scenarios. So, how the market makers trap. Old sellers have their stop loss here, and old buyers have their stop loss there. So, what do the market makers do? Let's assume there is an inside bar here, and the price is chopping, chopping, chopping. The market makers push the price lower into this liquidity pool, and retail sellers get triggered at the breakout. Everyone is selling at the breakout, and then the price rallies, knocking out all the sellers and buyers. When you see this rejection, you should automatically assume that it's going to attack 50% of the range as an easy target, or aim for the opposing end of the range, and that's it. Types of CRT. Before explaining the types of CRT, I want to first explain the types of CRT traders. One type of CRT traders treats it as a pattern, and which is totally wrong, and another type treats it logically. The right way is to use CRT logically because you need to understand that CRT is not a pattern. Those who see it as a pattern, and 90% of traders fall into this category, they mostly lose, and they will always lose. Now, moving on to the types of CRT. We have 5 types of CRT. Number 1 is the classic CRT, which is the 3-candle CRT. Candle number 1 creates the range high and range low. Then candle number 2 sweeps the high or low of the range and creates turtle soup. Finally, candle number 3, which is the fastest candle, moves down, 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 and all the way down to the opposing end of the CRT. So, this is the classic CRT, which is easy to trade, simple, and effective. Second of all, there is candle number 1, and the next candle is going to sweep both the high and the low. So, there is candle 1. Remember, there is always candle 1. This is fixed. But the second candle may be different. So, this is candle 2, which is a manipulation as well as a distribution candle. Now type number 3. So, there is candle 1, and then the next candle takes out the high. After that, there are multiple candles to reach the CRT low. Pattern traders are waiting for the third candle to reach the CRT low. That's why there are only few people who know the types of CRT. And now we have type 4. There is candle 1, which is the CRT, and then an inside candle, which is CRT plus an inside bar. Again, pattern traders get confused, thinking candle 3 is going to be a distribution candle, but they are wrong. Because candle size matters. So candle 1, then an inside candle 2, and then the third candle manipulates upward, creating a turtle soup and closing within the range. Finally, candle number 4, the distribution candle, reaches the CRT low. And finally, type 5. There is candle 1, and then a bunch of inside candles. Suddenly, a turtle soup occurs on one side, and then distribution candles lead the price toward the CRT low, and vice versa. So, this was the first video of the series, where we covered some basic CRT concepts. In the next video, we will be discussing which candles you should trade and which ones to avoid. This will help you improve your trading decisions. For those asking for recommendations on a good prop firm, after extensive research by me and my team, we've suggested a few. You can find the links in the channel bio or pinned in the Telegram group. Feel free to join through my affiliate link. For more premium content, stay tuned and keep following along. If you want more updates and discussions, make sure to join my Telegram group. The link is in the description. And if you have any question about the CRT, ask in the comment box. Good luck traders, and see you in the next video.